Hello, this is Steve Malone with Compass FX. I hope you're doing well today and getting some good trades. After trading for a number of years, sometimes I get myself wrapped up in complex trading techniques and strategies, and I oftentimes forget one of the most common difficulties in trading is keeping it simple. And today I want to share with you one of those keep it simple strategies. We're going to be looking for a tall candle, often referred to as an outside candle, engulfing candle, master candle, mother candle, whatever you want to call it. It's a tall candle, followed by a number of smaller candles or smaller bars that do not have higher highs or lower lows than the preceding tall candle. Then we're going to look for a breakout. When we get that breakout, our target is going to be either 25% to 50% of that tall candle's distance. And then we're going to use some money management. Our stop loss is going to be equitable to the target that we want. So for instance, if I go in for about a 50% distance, I want about the same 1-to-1 money management or better. So let me walk you through this process. It's pretty simple. By the way, there's no indicators included. You can see the outside candle that I have on the 1-hour chart. You can see the number of inside candles. Again, not making higher highs or lower lows. I typically like to look for 4 to 8 candles. Then I'm going to look for a break. So I've marked on my chart my low break point and my high break point. And the beautiful thing is I can go in and I can set pending orders. I can set a sell stop below here and a buy stop above here. And typically I look for about the distance of the spread. Then again, I take the distance from top to bottom. In this case, from about 34, we were just above 34.10. Let me see what this is. This comes out to be about 34 pips in this case. So I'm looking for about a 17 pip takeout of the marketplace, or a little bit less. We can see that the market pushed down pretty nicely, and we got about, in this case, we got about 20 pips or so out of this breakout to the downside, keeping it pretty simple. Now you can use all sorts of techniques. You can put on your pivots. Here's an example of putting on the pivots, and you can see that the market broke down and went right down to the S1 level and then pushed down, probably not quite, but almost to the midpoint between the S2 and S1 level. I prefer to use fibs. My Fib extension that I like to use from top to bottom here, I like to use about a 127.2, a 141.4, and then potentially to the 1618. Now again, you don't have to make this complex. Keeping it easy, looking for about a 25% to 50% of the distance from top to bottom. Now let's talk about where do we put our stop loss. Well, if I flip this around a little bit, let me put this to the bottom and this to the top. Usually what I look to do is I look at about that same distance 1-to-1. So I'm looking for about 17 pips here to the downside. Well, 17 pips up, about 50%, but I'm not going to put it right at the 50%. I'm going to put a little bit above. If I want a little bit less, like a 23.6 retrace, again, I'll put a little bit above. I'm not going to put it right at the number. I'm going to show you why that is here in a moment. Now, this technique can be used on most any time frame, favorably for the little bit higher time frames, just because your distance on the higher time frames is a bit more and a better chance of getting a 25 to 50% beyond the spread. So let's take a look at the pound yen. Today on the pound yen, here you can see this tall candle with 4 inside candles. We get a break. The distance here is about 13-14 pips, and we have a move of about 11 pips. A nice trade right there to the outside. This happens on the bigger picture as well. This is an example. You can see here a number of times this has taken place on the dollar CAD on a 4-hour chart. Now, one question you might have is, well, do I trade this as a continuation breakout, or do I trade this for a reversal? Well, it depends on where the market's at. If we get this up and down going on within the trend, within the overall direction, I look for continuation. An example of that is right here. We can see that we had a little breakout earlier and the market's trending higher and higher. And it continues trending higher because at this point the dollar CAD hadn't reached a previous high point. It reached that high point right up here. And now, so in this case, we get continuation, whereas in this case, we reached a high point and the market reversed. And when the market reversed and broke down, we got about 25, maybe 50% of from the high to the low in this situation here. Now, if you take a look at this, you can see that sometimes you can have an outside candle happen inside of a larger outside candle. Here's a case in point. We had this big candle here, but last week we had another outside candle, some inside candles, 4 of them here, and the market broke out. As a matter of fact, the distance here on this 4-hour chart was about 34 pips, and this moved down. Look at that, 19 pips, about half the distance. Let's take a look at this one here. This is from top to bottom is about somewhere in the ballpark about 80, looks like about 80 pips. When we broke and went down to the bottom here, when this bigger move finally started moving on down, the distance from that low to this low, look at that, about 40 pips. Again, this was 80 pips here, about a 50% move. Now, if you're looking at this, you've seen what I'm talking about, and guess what? You have another potential setup here in the CAD. You have this low point sitting about 858, and on the top side about 918. So you'd look for a break, and again, about a 25 to 50% move. Now, if you're a bigger picture person, trading out there on the daily, here's another example. Again, we had a break to the downside, and the distance here from top to bottom, it looks to me about 100 pips, and the move here from this bottom down looks to be right almost 60 pips in this case, so a 50% take. Now, about those stop losses, you can see here that when this pinned back up, it pinned right to the 38.2. So again, if you're using Fib and Fibonacci retracement levels as your stop loss levels, I recommend to set your stop loss beyond the level. So in this case, if you had set it at this level plus a little bit more than spread, you've been A-OK. Another example, let's go out to the weekly chart. You can see in this case, this distance here, now this is a big move here. This big tall candle here is about almost 300 pips, and you can see that this move here was almost, wow, almost 200 pips. So think about this. You have a 300 pip candle here, possibly of a 150 pip breakout, just going about half the distance. Again, when it bounced back up, and this is interesting, I looked at the daily on this, and on the daily, it actually pushed back up before it dropped. And again, in this case, if you put your stop loss right above that retracement level, that 38.2 retracement level, you've been okay. So again, on a stop loss basis, I'm looking at a 23.6, a 38.2, or maybe a 50% level, and just a little bit beyond those levels. And I'm looking for a 25 to 50% break beyond the outside candle when it does break. So again, this is a great technique to use. It's simple, it's easy, it doesn't require much, but if you were to add an indicator to it, like if I added the Trader's Dynamic Index to this, you can see that the Trader's Dynamic Index is telling me the overall direction of the market. I see the market kind of coming up a little bit right here, but when price action comes down, I can see that the overall direction is to the downside, and you might use a MACD, a stochastic, or the Trader's Dynamic Index to help you determine the direction based upon the sentiment here I'm looking at, and that way it'll help you identify a better breakout, whether top or bottom, from the outside candle. Well, this is Demon with Compass FX. Hope some of this information about trading an inside bar breakout and keeping it simple will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.